Hello and welcome to Financial Accounting. Today I will go over recording or journalizing transactions of a corporation, including investment and dividends. Today's video is a part of the topic, the accounting cycle, capturing economic events. I have many videos on this topic. Please follow the link posted in the description field to watch more videos. The Range Golf and Drive Range Incorporated was opened on March 1st. The following selected events and transactions occurred during March. March 1st, invested $500,000 cash in the business in exchange for common stock. March 3rd, purchased golf land for $380,000 cash. This price consists of land $100,000, building $220,000, and equipment $60,000. This purchase needs to be recorded as one compound entry. March 5th, advertised the opening of the driving range and golf course, paying advertising expenses of $16,000. March 6th, paid cash $14,800 for a one-year insurance policy. March 10th, purchased golf equipment for $25,000 from Mitchell Golf Company, payable in 30 days. March 18th, received golf fees of $12,000 in cash. March 25th, declared and paid a $5,000 cash dividend. March 30th, paid wages of $9,000. March 30th, paid Mitchell Golf Company in full. March 31st, received $7,500 of fees in cash. The Range Golf uses the following accounts: cash, prepaid insurance, land, buildings, equipment, accounts payable, common stock, dividends, service revenue, advertising expenses, and salaries and wages expenses. Let's journalize the March transactions and provide explanation for each journal entry. Let's look at the first transaction. On March 1st, the founder invested $500,000 cash in the business in exchange for common stock. This transaction is recorded as a debit to cash for $500,000 and a credit to the common stock account for the same amount. Just a reminder, cash is an asset account. It is increased by debit and decreased by credit. Common stock is a stockholder's equity account. It is increased by credit and decreased by debit. If you need to review the rules of debit and credit, I'm posting the link to the video in the description. On March 3rd, the company purchased golf land for $380,000 cash. The price consists of land $100,000, building $220,000, and equipment $60,000. This purchase needs to be recorded as one compound entry. Note that in this journal entry, debits equal credit. This is a compound journal entry. A compound journal entry means a combination of two or more debits and credits in a single accounting entry. In this example, we have 3 debits and 1 credit. Land, buildings, and equipment are all asset accounts. They are increased by debit. Cash is decreased by credit. On March 5th, the company advertised the opening of the drive range and golf course, paying advertising expenses of $16,000. This transaction is recorded as a debit or increase to the advertising expenses of $16,000 and a credit or decrease in cash for the same amount. Expenses are increased by debit and decreased by credit. On March 6, the company paid $14,800 cash for a one-year insurance policy. This transaction is recorded as a debit or increase in the prepaid insurance account of $14,800 and a credit or decrease in cash for the same amount. Prepaid insurance is an asset account. It is increased by debit and decreased by credit. To learn more about prepaid insurance, watch the video Adjustment for Prepaid Insurance. On March 10th, the company purchased golf equipment for $25,000 from Mitchell Golf Company, payable in 30 days. This transaction is recorded as a debit or increase to equipment and a credit or increase to accounts payable. Unlike a couple of previous transactions, this one is a purchase on account. It means that cash was not paid at the moment of sale, and the company owes $25,000 to the vendor. Accounts payable is a liability account. It is increased by credit and decreased by debit. On March 18th, the company received golf fees of $12,000 in cash. The fees received from customers is the company's revenue. Therefore, we record the transaction as follows. Cash is debited or increased for $12,000, and service revenue is credited or increased for the same amount. Revenue is increased by credit and decreased by debit. On March 25th, the company declared and paid a $5,000 cash dividend. A dividend is a payment either in cash, other assets, or stock from a reporting entity to its shareholders. In our example, the company paid dividends in cash. This transaction is recorded as a debit or increase in the dividends account for $5,000 and a credit or decrease in cash. The dividends account is increased by debit and decreased by credit. On March 30th, the company paid wages of $9,000. This transaction is recorded as an increase or debit to salaries and wages expense account for $9,000 and a decrease or credit to cash for the same amount. On March 30th, the company paid Mitchell Golf Company in full. Recall that the equipment was purchased on account for $25,000. The balance in the accounts payable account is $25,000. If you think in terms of a T account, the balance is on the credit side, as accounts payable is a liability account. When payment is made, the balance in the accounts payable account decreases. Since the balance was paid in full, the transaction is recorded as a debit or decrease in the accounts payable account for $25,000 and a credit or decrease in cash for the same amount. On March 31st, the company received $7,500 of fees in cash. This transaction is recorded as a debit or increase in cash for $7,500 and a credit or increase in the service revenue account for the same amount. I hope you found this video helpful. If you did, please make sure to subscribe, hit the like button and ring the notification bell so you're notified when we release more videos like this. Don't forget to visit my channel for more videos on financial and intermediate accounting. Thank you all so much for watching, and I hope to see you all again in the next video.